people being on a program that's going to
Yep.
help not only the homeowner but help the insurance company say, you know what, let's take a chance on this. So it sounds like you're kind of putting together those kind of programs.
Yep. Our WOWS program does it, and now we're using it. We're doing it with wholesaling entities below us because we do high value homes, but there's a lot of great homes. It could be a 3,000 square foot home, 4,000 square foot home, 2,500 square foot home. These are all things that everyone needs to realize and take in consideration. Just because you think you're not in a fire zone doesn't mean you're not. Okay.
Right.
At the same time, if you are in a fire zone and things like that, these mitigation, the fire hardening that you do and your team does, it's everyone needs to realize this. This is the new direction of the insurance industry.
Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
All right, everyone. Welcome back to another episode of All Things Wildfire. Today, Mr. Robert Feldman with who has the WOWS program of insurance. And guys,
sir,
you're going to want to listen in to this episode. I think Robert's going to have a lot of good feedback, not only for high net worth clients, for you listeners out there, but also for middle market, right? Like there's a need for insurance. There's pain everywhere. We've got to figure out what's going on. Robert has got some solutions that he's been working on for, I think, a few years now. Robert, let me have you introduce yourself and give us a little bit of history about what you do, brother.
Yep. Hey, so first of all, hello, everybody. My name is Robert Feldman. I'm the CEO and co-founder of WOWS Insurance. Well, WOWS Insurance is really an extension of what I did for over 25 years. I was a insurance broker that helped basically fire zone across California and 8 to 9 Western states. What made us unique was as an insurance broker, I used to work with different carriers. I'd work with senior leadership and get capacity and be able to place business with everything that's going on. With everything that's happened over really the last 5 or 10 years, about 2.5 years ago, we launched the WOWS program. The WOWS program is a directional change in homeowners insurance. And what we're doing is we're really reorganizing how insurance works in California and not just California, but 8 Western states. And we're really excited. It's for high value homes, but we're seeing a lot of great things because we still work as a wholesaler, OP, right now, and we're representing multiple companies. And we're appointing brokers left and right, and it's been a great process over the last 2 years.
Wow. Okay. So Robert, this is interesting. So you're saying that in a time, in an era where getting insurance is incredibly difficult.
Yep.
Number one. Number two, the premiums are extremely high.
Yep.
I've seen some of our high net worth clients are like, hey, I'm accustomed to paying $100,000 a year for annual premiums. And for those of you listening, I know that may seem like a lot. In my world, in this area in California, in the Los Angeles area, a high net worth client, that seems to be an average. But they are now paying 5 times, 6, 7 times. Like, that's where it's like insanely crazy.
Oh, it's crazy. It's crazy. It's nuts, OP.
And so you've seen that happen too, right?
Absolutely. And that's kind of why we made the change and we were able to fix. We were very happy to secure our paper. So we have our paper. We're fully operational now. And really, what's great about being here today is I would say probably all the podcasts you did, this is the one podcast we'll be able to joke around and look back at years from now where we can really talk about how we directionally made a change. Your company does a lot of the fire hardening that really is now a part of what needs to happen. The mistakes in the insurance industry is really 2 things. And I was on committee for over half the 14 carriers. I was bringing people in and out of markets. That's why we still do a wholesale part of us, not just the WOWS program for high value. We can do smaller homes also. We have a company called American Western that is absolutely spectacular. They're an A+ rated. They are, I never heard this. It's the first time I heard OP. Oh, it's A++.
Wow.
I never heard the 2 pluses. Munich Re. We have a great company we work with called Stand that will do less than 10 million. And they're aggressive in the market with us as a wholesaler. And we're helping brokers across California and consumers alike. But the really thing that's really killing the insurance companies is really 2 things. One is basically what you do and what's not getting done.
Yeah.
It's the fire hardening. Fire hardening. Guys, everybody out there needs to realize this right now. If you're listening as a consumer, and actually, by the way, I always laugh, OP, even if it's insurance brokers, we're all consumers.
100%.
I mean,
100%.
we're all consumers. Even as brokers and things like that, we're consumers.
Absolutely.
So what I would say is really why it's important to realize this is fire hardening, even if you believe you're in a perfect area, there's areas, the Palisades that burned this last time, that was considered perfect area just because of the wind patterns.
Yes.
And so fire hardening is a humongous part of this. The other part that's really killing the insurance company is oversaturation. So they end up with too much of a market share and not having diversification of risk. And so our WOWS program basically does that. What we do on the high network side is we actually build through our fronting carrier, our company, which our paper is Prime. Prime Insurance is, we have a specialty program with Prime. So we're loading people in, and eventually we'll build portfolios that are perfectly spread out. So there's never more than one home in a fire. And I can bring that to the London reinsurers and the Bermuda and different parts of the world that are aggressively liking our program.
Got it. All right, let me unpack a couple things here,
Go.
Robert. We've got, so with regards to home hardening, 100%, I think, let me ask you this, because we'll go, I remember, man, this is last year, and I feel so bad for these clients. We went out, we did a home hardening assessment, and the carrier or broker is saying, hey, please contact my insured. We contact the insured. They're coming up for renewal in a few months. The carrier or broker wants to get ahead of it.
Yep.
And say, hey, Mr. Homeowner, please do your home hardening. We get there, do the assessment. We review everything. And there's a poor attitude around it. Like, oh, this is ridiculous. Like, I'm here, OP, I'm on Malibu. Like, my backyard's the ocean. Like, what are the chances that my house is going to burn? This is ridiculous. I don't even know what this is just a money game. And I'm like, look, Mr. and Mrs. Smith, you can believe what you want to believe. Yep. The science is here. These are the data points. And that house is no longer there, brother.
Well, you know what's crazy, OP, to that very point, you were going to say, I got in trouble with London. Because when I was in London over the last couple of years, the two things I kept saying over and over again that don't happen in wildfires is PCH doesn't burn.
You were saying that?
I said that. I go, PCH doesn't burn. There's a perfect fire break, PCH doesn't burn, right? And the other thing I said is HOAs do not burn. Okay, so you might have a building that burns. Well, guess what the Palisades fire did to me? It knocked me out of the box on both those things. So what's crazy is when you get into this, to your point, is the fire, with regard to fire hardening. But the one advantage we have right now as consumers to brokers to even wholesalers as we bring them to insurance companies is I think this last round has really got consumers' eyes wide open.
Yep.
And so now, how long that lasts for, OP, you and I both know the further we get away from a fire, get 2 years, 3 years, people are going to move away from it. But what happened, which we're not moving away from, is insurance companies and rates. And so what's going on right now is the rates are rising. What we're talking about doing, in partnership with you, and building fire hardening plans, building annual mitigation plans, doing these things in advance prior to binding. Now, this is the key words, prior to binding. We're saving consumers, just drastic money differences by doing this. And so, there's a lot of technology, OP, that you and I can talk about at great length. I even saw a company called Komodo. I don't know if you guys ever dealt with Komodo. Yeah. I think they're spectacular, by the way. I don't have anything. Everyone out there needs to realize I am not a paid spokesperson for them. I just geek out over them. They've got some incredible systems. They even have like an iron dome system that you would see in the Middle East that takes the ambers out of the sky.
Yeah, they've got where they set something up in the backyard, it deploys. It's really interesting.
Yep.
Yeah.
And so this is the next generation, OP, of what's going to happen.
Yep.
Because those that do the fire hardening, the ones that were getting upset with you, that are losing their homes, or at the same time getting upset with if anybody coming to you now getting upset needs to realize it can make the mitigation cost of what you're talking about might be the savings there's more of a savings than what the cost is.
And you know what? More so now, like this is when they realize it. And let me just share this, Robert. Like we were in Palisades the day of the ignition, and the only reason we were there is we had a contract with an insured where we had an agreement with the carrier and with them, the homeowner mainly, like, hey, if there's an ignition within 5 miles, we're going to deploy. We're going out there. We can call the homeowner, Mrs. Smith, we're coming out. She says, well, I don't see anything. So like, should you guys really come out? We're like, hey, look, we're under contract. We're deploying. And so about an hour later, we're 10 minutes away from the property. And she says, oh my God, where are you guys? I see smoke everywhere. Robert, we're there. We're spraying retardant. We're prepping the house, getting it ready for ember attacks, right? All the neighbors come out.
Oh, dude, you could have, it's like everyone wants you now, OP.
I did not have enough product, brother. I'm telling you. I was like, what is going on out there? And then for the 5 days later, Robert, every single day, over 100 phone calls. We had so many vehicles out there. Like the wind was incredible.
Yep.
Right. And so to your point with the insurance
coverage,
you
can't defend it. You can't defend wind.
It's crazy, man. It's crazy. So I think people being on a program that's going to help not only the homeowner, but help the insurance company say, you know what, let's take a chance on this. So it sounds like you're kind of putting together those kind of programs.
Yep. Our WOWS program does it. And now we're doing it with wholesaling entities below us, because we do high value homes, but there's a lot of great homes. It could be a 3,000 square foot home, 4,000 square foot home, 2,500 square foot home. These are all things that everyone needs to realize and take in consideration. Just because you think you're not in a fire zone doesn't mean you're not. Okay. Right. At the same time, if you are in a fire zone and things like that, these mitigation, the fire hardening that you do and your team does, it's everyone needs to realize this. This is the new direction of the insurance industry. This isn't, I work in London and Bermuda with all these reinsurance, and what everyone needs to realize, what reinsurance really is the entities that are supporting the insurance company, the money for the shock losses that are occurring. And what I say to everybody out there is, when I'm in London and Bermuda, or different parts of the world, the first thing they are asking is, what are you doing to change? So like, for example, we had our WOWS program and we built these portfolios. We were coming to market. So a year ago, March, we built 13 different portfolios with over approximately 100 homes in each, perfectly spread of risk. We had a 4% loss ratio because of the homes we chose that had fire hardening.
Are you serious?
4% loss ratio. So that's why when we start picking up additional wholesaling gigs, and why we're working with that too is, I made a comment to you, we're about to head out to a big trade show that's this week in Las Vegas. We appoint insurance brokers. So for everyone out there needs to realize, we're not really the competition. So if you're a broker out there, my joke is, please find me. You can look up WOWS. Don't forget the S. So wowsinsurance.com. If you're bored tonight, you can't go to sleep, you can hear me on Bloomberg and your podcast and other places is the joke. You can hear me everywhere. We're going to affect change, not just for California, but 8 to 9 Western states. And that's why, OP, I love every minute of being here today, because you guys are really what needs to happen prior to, not after, but prior to. It's your exact example you used right there, OP, is scary. Everyone gets religion all of a sudden when the fire is there. Absolutely. What was everyone doing for the last 2 years prior to the fire?
Not really paying attention. It's not going to happen to me. And then, and then it hits multiple neighborhoods in different areas. And look, I mean, what other states are you in? Because I think that you got Colorado, you've got Montana, you got all these areas that are.
We're California right now as our program launches and continues to launch. Nevada will probably be the first one, so we're going to be in Nevada pretty quick. Utah will be right there. Our company Prime has a headquarters in Utah, so we kind of smiled and said we'll be in Utah pretty quick. These are the different, because Park City, as an example, has a terrible time getting this right now. I mean, Bend, Oregon's having a terrible time. I get phone calls all the time from different states, and even including different municipals. I'm getting a lot of the departments of insurance asking, "What are we? Where are you guys?" So they know the change is coming. OP.
Now, let me ask you, Robert, let's talk about what you mentioned earlier, oversaturation for the insurance carriers.
Yep.
You've got a carrier that says, they typically would be like, cool, we're going to take a chance on this property. Yes, they've done their home hardening. Okay, great. We're going to take a chance. However, let's look at our data. Okay, we're oversaturated here. We don't want.
They're not right yet. They're not right.
So can you explain what the oversaturation process looks like for a carrier, so that way a homeowner can really have a better understanding of how that works?
Absolutely. Really, one of the failures of the industry over the last 10 years is the fact that insurance companies, without using names, have gotten where they get what's called oversaturated, meaning that there's too many people in a given area, so a given catastrophe, and it's out of balance. So really, if you look up the definition of insurance, OP, and everyone always forgets this definition. Definition of insurance is a collection of risks spread out so it offsets cost, or spread of risk is the key thing. And so what happens is, so let's say, for example, OP, you and I are going to start an insurance company, okay? And we fundraise, and we do all kinds of, we do the investor funds, and we do all the great things, and we have an insurance company, and we're going to put $1 billion with a B at risk in California. I know how I would be. I think you could agree with me. I wouldn't want $1 billion at risk all in one city. I want $1 billion at risk where there's never more than one home in a fire, or spread of risk. And so what happens when I work with London, and when I with the big reinsurance Lloyd's of London syndicates, that's what I've been explaining to them. I go, look, I had one carrier, I was kind of smiling. I go, I knew for a fact they had about $8 to $10 billion of what's called capacity in California. And the problem is they keep getting pushed into oversaturation. And I kind of smile. I go, guys, why we're going to be successful is our programs are built on portfolios. We do things differently, spread risk, so that you can build this in a way to be profitable. Because insurance rates, as you mentioned, OP, are out of control. And right now, it's really what there is there's no real soft ground. There's no real landing. They don't know where the rates, where can it hit. Right. And so what they're doing is they're overpricing. Well, when you can show you have a 4% loss ratio, you can show how you build the models, you require fire hardening in advance with an annual mitigation plan, and then you have the house completely inspected inside and outside when it comes to high value insurance. So it's a this many square feet house and this much in detached structure, and you've got CoreLogic and every major company running the analytics back. There's no guesswork here. The industry has failed this way, in the fact that they're doing guesswork. And with the WOWS program and what we're doing as a wholesaler, we're stamping that out. There's no guess anymore. We're going to fix this.
And why do you think the carriers have failed to now? Like, what has it just not been important enough? Have they not seen enough losses? Like, what?
No, I think what happens, it depends on when you're talking about admitted or non-admitted product. I mean, obviously, different states have different problems in the admitted space. So, you're dealing with regulatory and Department of Insurance. I think the non-admitted space has been more active in trying to fix itself. But the problem is, again, it's not the way the industry is designed. It's not designed to spread risk, even though you're in an industry where you're supposed to spread risk. So if you're State Farm or your Farmers or your Allstate in a good market, and you say, I'll use, because California is pretty rough right now, but let's just say Nevada or other states, you submit as an admitted carrier to and give the information to the Department of Insurance and says, if it's this criteria and this, it could be millions of criteria, but it's like year built and, and distance to brush and all these fire scores and different things. But if the answer is, if the answer is, it fits these criteria, you write the business. Well, the problem is what happens when you have 20 homes on one street that fit that criteria? I mean, that's the thing. And full disclosure, OP, I was one of the worst culprits. OP, can I say this? Hopefully it's okay to say this. When I was an insurance broker, I would convince insurance companies to give me capacity. Okay, capacity again is volume of premium I could put on books.
Yeah. And
I'll never forget this. I had one company where, and they got very lucky. They never had a major fire there, but I kind of got them because I got given $500 million of capacity, meaning coverage, in the Monterey area. Well, there's a famous reserve up there, one of the famous community called Tehama. I'm a big Clint Eastwood fan, by the way.
Okay.
And Clint Eastwood's private gated community. I went up there, had a talk. I think I wrote 20, 30 policies. I put $500 million in one area.
Oh, damn.
Okay. So what was I doing? I'm really, that's the problem with the industry. You have insurance companies that have problems where they can't quite limit. That's why the WOWS and spread of risk. And I mean, if I was the head of a Department of Insurance, I would never let an insurance company have more than a couple percent of a given market. And I would force others to come in so that what I would want to have is you want 30 companies all with 3%, 4%.
Yep.
You can't have an insurance company with 25 or 30% of a market.
We won't keep the carriers healthy, man.
And that's the whole ball game. That's the whole ball game. You can't keep them healthy.
Now, Robert, can you, for some of the listeners that are either hearing for the first time or they don't really understand the difference between admitted and non-admitted. Can you break it down so they have an understanding as to what separates those two camps?
Yep. In California, an admitted carrier that's an example of a State Farm and Farmers and Allstate. These are insurance companies that file with the California Department of Insurance with regard to coverages and rates. So we, not political in any which way. It's just that's the way our system's built.
Yep.
Right, wrong, good or bad, that's the way it's always been built. There was a Prop 103 that was put in years ago. That was what kind of set it. It was originally for auto insurance, but it moved across different lines of insurance. So, but again, that's an admitted carrier. A non-admitted carrier is somebody that files in California, but is not under the oversight of the Department of Insurance. So a non-admitted carrier is like Lloyd's of London. Okay. Is a good example of that. Now, non-admitted carriers, there's a lot of question regarding stability. Well, in California, admitted carriers have the Admitted Carriers Association. It's a guarantee, but people don't realize it's only $250,000 in coverage.
Oh, really?
Yep. So when you get into admitted and non-admitted, what you're really looking for is stability of a company. There are admitted companies that are wobbling right now that I personally wouldn't want to put things through. And there's a ton of non-admitted that are, like I made a comment about American Western being A++ rated. Stand is an A-rated company. These are great financial companies. I personally think those are great ones to be involved with. So it's back and forth is what I would argue. Yeah. And now California, with all the admitted carriers kind of pulling back, we're really moving towards a non-admitted state.
Yes, agreed. And I think years and years ago, 10 years ago, you would talk about non-admitted and it was too risky. Like the homeowner's like, no. I'm not sure, how financially stable are they if I have a claim? But you're right. Right now, the admitted carriers are like, I'm out of here. And so another question regarding Prop 103 and the regulations, how often are the carriers able to go to the Department of Insurance in California to say, hey, guys, we just took a hit. We need to increase our rates. And is that process really laborious to kind of get?
Yeah, there is. And obviously there's consumer right groups that fight against it. There's a lot of things. And so what happens is if you're an admitted carrier in California, you can file up to a 6.9% rate increase without having to do what's called judicial review, where you have to go in front of a judge. And those that have seen the news recently, that's what the big thing about State Farm right now is they're battling back and forth, is under judicial review. The problem is, this is a philosophy of insurance, is that there's enough carriers. Our biggest problem in California, and it's happening in Nevada and other states. I'm a huge fan of the Department of Insurance in Nevada. I think Scott Kipper, I think those guys have it really dialed in. Nick is the deputy chief I deal with there. I think they have a really good concept, really good idea. Different states have different views. California is in a tough spot. And so what happens is, but again, to drive competition, you've got to almost kind of release some of the barriers. And you've got to because an example, and I use this all the time, is if a company like State Farm or Farmers or Allstate, if they want to take a 500% rate increase, I'm just being facetious, by the way, not doing this, basically means every consumer is going to leave them. Right. So really the job is really doing what we're doing at WOWS, where we keep continuing to build programs and build things to bring into California, because then if a carrier wants to leave or they want to pull back or they don't think it's profitable, a lot of that is just, as terrible as it sounds, is repositioning. They know that they have oversaturation. So there's a great company called Bamboo. Bamboo is an A-rated company. They have an admitted, non-admitted product. Their admitted product is in oversaturation in some markets. They're shutting it down. There's companies like Travelers right now that's in basic shutdown. Safeco's announcing a non-renewal. But with that being said, we're helping with great companies like ISC to come in and work in California. We're working with as a wholesaler for American Western, and we're working with Stan, and we're bringing all these additional ones back in, because even the non-admitted are backing out. There's a company called AZ Guard. Berkshire Hathaway is now in the middle of a non-renewal, and they do large.
Yeah.
And so we're writing all those. So we're starting to pick those up. So it's just a matter of preparation, And I think OP, one of the big mistakes that consumers make is they are ostrich in the sand, and put their head in the sand. They got their renewal. Great. They got the renewal, and it was here we are, in April, and they go, hey, I got my renewal. It's in February. I don't have to worry about this until February next year. Well, if you got a carrier that already announced that they're pulling back or pulling out, you're not now, unless the zombie apocalypse happens, OP, you're going to be in trouble, and we're going to be there next February before you know it. So what are you doing right now?
Yeah.
Are they talking to you? Are they
work, baby?
Hardening? Are they doing all the things that they need to be necessary for a company like WOWS to be able to bring it to different insurance companies to really, through insurance brokers, to make this work?
Yeah, I think homeowners, people, us consumers, really need to allow the experts to be able to reposition us in a favorable light. But with that is also like the timing, because I've had situations, Robert, where I get a call. It's like, hey, I need ember resistant vents. I need vegetation management. I need long-term retardant sprayed. And I need it done by next Friday. I'm like, okay, man, what are you talking about?
That's OP. That's exactly what I was just saying. People want to do what they do is they want to call you. They had a February renewal, or I get those right now in May. They had a May renewal, and they're going, "What can you do for me?"
Dang.
And I'm going, "Well, we can definitely help you, but it's just not at this moment, because a high value inspection and to have your report being built out and have a mitigation being done." The days of having, I see this throughout California. I see it in all the different states. People put all these there's 3 trees that you and I both know should be illegal. Okay. Yeah. Cypress should be illegal. Okay. Eucalyptus should be illegal is the 2. And you can get into others. The 2 main ones is cypress and eucalyptus and palms. Okay. Now, I almost forgot the 3rd one's palms. Well, the problem is, how do you look at it? I have consumers that right now, for one of our programs called Stand, we had one consumer where the renewable rate is going to come in at about 130, 140,000, and Stand is at like 63,000. Okay, so it's half. Well, but the problem is, Stand looked up and said, "Palm trees got to go. These trees got to go. This thing's got to go."
Get rid of the cypress,
$20,000, $30,000 in mitigation. So it's like I look at the consumer and go, "How much do you love those palm trees?" Because if you do this, you spend the 20 or 30,000 with like a company like yours, OP, where you do the mitigation.
Yeah.
Now you got a $64,000 premium, not a $120,000 premium. That's an immediate return on money.
100%. And like, this is insurance that's annually, man. Like, so yes. Annually, you're going to make the return.
You're stacking.
100%, right? But we're running into the same situation. The homeowners are saying, "Hey, look, I don't know that I want to remove my vegetation, my trees, my palms, my cypress, Italian cypress that are providing the privacy."
Yes, the privacy is
a lot, brother. Like, yep. Oh my gosh, and yes, they totally have privacy from the neighbor, but damn, like those are gonna burn, and it's gonna take the house down, man.
Listen, OP, if it's you and I both know enough about this industry, if this was our money as insurance companies, we ain't putting our money into this, involved in this.
Man. No,
you can't defend the house. 80 mile an hour, 70, 80, 90 mile an hour winds blowing ambers. And you got a row of those cypress trees that they think is privacy. Guess what it does? What it is, basically, it's a landing strip for ambers to drop right on your house.
100%.
Yeah.
Freaking Roman candles, man. And I think this creates an opportunity for landscape architects to really like figure something out, man. Give these people an option, because I get it. Like, hey, now you're gonna leave me naked. Now what are you gonna do for me? Like, we're like, I don't know. Let's just.
I had one consumer made their fence 10 feet.
Yeah.
They wanted the privacy. They had the cypress going up 20, 30 feet, but they go, okay, and they got the approval. They took the cypress out. They actually did. I thought it was a really brilliant client, by the way. They looked at the client and go, "Look, whether you like it or not, I'm taking the cypress out on our side, because not that I want to see you and or that you want to see me, but the problem is we're not going to get insurance, or the insurance is going to be exorbitant. So I'm going to take this out. We're going to build a beautiful stone, looking. You can do what you want to do on your side. I'm putting it up on our side." And guess what? Both neighbors said absolutely. They actually chipped in. It was actually people are kind of kicking in. So, I mean, there's going to be a lot of people. I see these in Bel Air. I see these in different parts where you see like the jungle, like where you look at a Google and you look down on the Google map, online, and you can't see the ground. You can barely see the house.
Yeah.
Because they have so much. And I go, hey, I tell brokers all the time, hey, I got a carrier will do it, but it's going to be extensive to get this thing to work.
Yeah. It's crazy. And I love to hear that there's collaboration between neighbors. And I think now more than ever, we're going to have to knock on the neighbor's door and say, hey, let me introduce myself, right? If you're one of these people that don't know your neighbors, you got to get to know your neighbors, and you got to just like talk about the vulnerabilities.
Absolutely. We're in together. It's all in it together, guys. It's all hands on deck, as they say.
Love that. I love that idea. Now, I do want to ask you about the realtors. I know that you're heavy in talking with realtors, but really quick before we jump into that, what can you tell me about the California Fair Plan? I mean, it's the insurance of last resort.
Yep.
I don't know if you've had some clients that have like had to get it because there's no one else that would take them. But any thoughts or ideas or
I could talk at great length on this one, OP.
All right, let's talk about it.
So California Fair Plan was actually originally built in the 1960s. It was actually designed for the WOWS riots and was put in for inner city, where a lot of the insurance companies didn't want to do, and it branched all the way out to fire, okay, because it was a fire-only policy, and it over time has migrated into being fire zone, not inner city, but fire zones. With that being said, it's a $3 million maximum total coverage. A couple years ago, there was a bill that was passed that requires 80% insured to value. So here's the problem that's happening with the Cal Fair Plan for consumers out there. We can all agree that rebuild costs are skyrocketing, okay? I mean, it's over the last 5 years, if you have everyone out there listening right now, the thing I would tell you is there is nothing less than 500 a square foot to rebuild in California. There's a lot of people that try to argue with me. And I'm sorry to say I was right again with the Altadena fires. Altadena's coming in at 500 or 600 a square foot minimums. And so I had a consumer trying to argue through me with a broker, trying to argue that it's 300 a square foot. And I go, unless you're a contractor and you're calling in every favor that you've ever had, because everyone owes you, maybe you can get 300 square foot. The material cost is over 300 square foot now for a lot of homes, not just the labor. And so what happens is when we get into this whole situation about rebuild, why it's important to know this about the Cal Fair Plan is there's only a $3 million maximum for all of your coverages in fire. Now, we've been helping bring in excess fire policies, but there's a big miscommunication. A lot of consumers out there have what's called a DIC or wraparound policy. Those are policies that do liability insurance, and they do water damage and theft and other coverages to try to make a client whole on the Cal Fair Plan. The problem with it, though, OP, is they specifically exclude fire.
Right.
Now, why I say that is, so let's say, for example, you have a 4,000 square foot house. 4,000 square foot house, right? Okay. And let's just say for giggles, you're a $600 a square foot house. That's $2.4 million to rebuild your house. Well, remember, 3 million is the max.
Right.
You're not going to have any contents coverage, or very little. You're not going to have additional living expenses, very little. You're not going to have any building, because building code upgrades requires $250,000. So what happens is a lot of consumers that are under the kind of a false pretense or false security that their wraparound gives them coverage. It does not. The only thing it does is if you have an excess fire policy, and that's kind of what the WOWS program is. So we take it all the way up. But again, it's getting to know why it's scary is there are areas now that are $1,000 a square foot. OP,
yes, right.
They both know. Well, think about that for a second. If that means if an area is $1,000 a square foot, that means if your house is 3,000 square feet, you tapped out just on structure, no other coverages. Well, what happens if you're in that area and you're a 5,000 square foot house? Now you don't have 80% insured to value. The Department of Insurance, Cal Fair Plan, has the right to do depreciation and not even pay you full amounts.
Wow.
So that's what's you're going to see showing up in the Palisades and Eaton fires and all these things. It's going to get crazier. So when you're on the Cal Fair Plan, I always use OP, a terrible analogy of the three bears. Remember that? Not too hot, not too cold, just right. Cal Fair Plan, man, you can't be too low. You can't be just right. You got to be high. You got to be high on coverage on your rebuild. If you think it's 500 square foot, you better insure for 6.
Got it.
Because the key word is and the provision is at the time of loss, OP.
Right. And
that's the scary thing. So you bind a policy in January, and we had this crazy thing. They were talking about the tariffs and all this stuff going on. Well, there's an estimate as much as 25% rate cost rebuild goes up overnight.
Didn't even think about that, man. I mean,
so think about that for a second. And what's really scary is I almost joke around OP with everybody on here right now. I do this with realtors all the time. We can segue to the realtors.
Yeah.
And when I speak to the realtors, I say it this way, and because I always say realtors are spectacular. They take care of people. That's what they do, right? And I always challenge everybody in the room. And every time I speak, I was in Temecula last week. I spoke in front of a group of realtors, pretty large group of realtors. And I was kind of talking to them, and I challenged and I had all these text messages and emails thanking me, because I said, look, do me a favor, pull out your own policy. You haven't done this. It's like a contractor has the worst house on the street, OP, because he's building everyone else's house. I said, look, you're helping everybody else get insurance right now for your clients. If it doesn't say 500 a square foot, and what I mean by that is if you're a 3,000 square foot house, if it doesn't say 1.5 million on your rebuild, you need to call and fix that. And overwhelmingly, I only had one call me up and say, hey, I'm actually insured to value. I knew the broker he's appointed with us, and I gave him kind of a high five. I said, good job. Yeah. Good job. I was going to give him a high five moment. So,
wow. And so on top of those limitations, on top of that aspect of coverage, you also have like surge costs.
Yes.
That happen like right now. It's really interesting. I was talking to a pool contractor, and we did deodorization and cleaning stuff in the Palisades, and this pool contractor, super high-end home, commercial grade equipment. And I'm like, hey man, like how many of these homes are you doing down here? He says, look, OP, I'm trying to get out of the Palisades, honestly.
Yep.
I don't want any work. And he says, please don't refer me, right?
Yeah.
And I'm like,
it's scary.
Yeah. I said, why is that? He says, think about this, man. Like, I have to now travel to Palisades. The traffic alone is going to be incredibly difficult with a ton of contractors going in there. On top of that, the cost of materials is going to skyrocket. And he says, imagine this. Imagine that you're on a property and you have most of the neighborhoods wiped out. Where are we going to park? It's tough enough to park when you have contractors working on one house.
Yeah.
The whole damn neighborhood. And I'm like, dude,
well,
I didn't think about that. And the equipment's it's
anyway,
it's nuts, man.
Actually, I know one contractor is a big company. They're even looking at putting like trailers on some of the properties.
Yeah.
So that what they can do is they can have their workers. So let's say they're building 10 or 15 homes in one area, look it up and saying, hey, Monday through Friday, you can stay here. And they supply them up and keep them on site, right? Yeah. Just to keep them there, just so it makes it easy, so people don't have to take 2 hours to get there each way, 3 hours to get there each way.
Got to get creative, man.
Got to get creative.
Yep. Yeah, because it's incredible. Yeah. So with the realtors.
Yes.
Now I think, look, I interviewed one realtor months ago, and he told me, he says, look, man, from his perspective, he only had one deal so far, and you probably know many, but he says, look, that everything was going good, the deal was closing until the insurance came up. He says, we used to call for insurance, like that was the last thing to do.
Yeah.
Like, oh yeah, it was insurance, no big deal, right?
Oh, OP, and I used to be the king of this when I was a broker.
Yeah.
Because I could think of me in 25 years of this, doing this. When I was 5-10 years in, man, I used to do competition barbecue. So I would bring in competition barbecue just to host meetings at their offices.
Oh, trip
because
out.
Everybody was like, because you'd have 5 or 10 companies that were all within, I joke around 50 cents apart, meaning only dollars apart, right? And you would build relationships. Now the biggest problem, and that's when the realtors used to look up and go, hey, just call whoever you have your auto insurance with and go get your house, right? Now it's a given. So like we're working with that. Part of the reason why we're really aggressively working with, I've always been a speaker for different realtor associations, and knock on wood, I should be the speaker again. They have their reimage, their big conference. In the past, I've been the speaker on insurance and fire zones for California Association of Realtors. One of the things that we're really talking to the listing agents, and it goes back to what you do, is I'm like, look, most consumers don't just pick up today and say, hey, today's April 22nd. The 25th is on Friday. Hey, I got an idea. I want to list my house today on Friday. Put it on MLS, right? Get me out there, right? Yeah. What they're doing is they're thinking about it over time and they're getting ready for it. I go, this is the prep work. This is why I've been involving the realtors in this. I always make a joke when I'm speaking in front of a group of realtors. I go, OP, how many of you get paid for opening escrow? And I raise my hand like this. And once in a while I catch them, catch somebody slipping. They go, no, we get paid for closing escrow. I go, right. Well, it doesn't matter how great you are in marketing. It doesn't matter what the story is. If you don't have this house properly mitigated with fire hardening, if you don't have the things that set up, even if it's on perfect street, you're going to have limitations on insurance. It's going to affect your deals. So this is why doing the fire hardening reports in advance. This is why we're having a high value inspection report done in advance. Why we're having annual mitigation plans built out. Why are we doing these things? We're not doing it just because we think it is a good idea, but just because we're doing this to make homes safer from fires. But at the same time, if you're a consumer, you want it safer, but you also want to have in the back of your mind, can I actually sell my house?
Yes. Boom, man. I mean, one thing is, hey, let me get a buyer qualified to get in here. Cool. Let me get with WOWS Insurance to make sure that we can get them insured. Great. We put them into the home. Well, years later, whenever they decide to sell, like you have to be able to sell this property, man.
Well, that's why our programs require annual mitigation. It's a given.
Yeah.
So part of what happens is this is a thing that people have to get used to. It's not just doing fire hardening once.
Yep.
So great, you did fire hardening, and they did a great job. OP, you went out and you closed out. You did 16th inch mesh, and they made sure the eaves were closed, and you did all the I would say hardware part of it.
Yep.
Right. Now all of a sudden, you come out, and insurance companies get caught in this on they re-inspect 2 years later, 3 years later, and the consumer puts in a cypress tree right against the house because they think it looks beautiful to have these hedges. Yeah. Right? Can't do it. You got to have this annual. It has to be done annually as a mitigation. What are you doing? There are systems that we're now, because you guys represent companies that do installation for really, we were talking about this, it's just systems to defend the house.
Yep.
Everything from FOSS check systems to different things. There's a lot of the homes now to get insurance. It's going to be a requirement.
Yes.
It's not a question of if. One of the ones you and I both love is we talk about the Komodo one. We're talking about the Iron Dome systems.
Yeah,
now,
that's right.
Probably for a lot bigger house, but there's going to be some homes we're going to look up and say, if the Iron Dome system is not in place,
yes, you see that coming, man.
Not interesting.
Yes,
we're not interested.
With realtors, it's funny. I remember back in the day, like mold was the deal killer. Like,
yep,
man, we can't have mold because that thing's going to kill the deal. Okay, well now wildfire mitigation, man. If you don't have that, that's going to kill the deal. But when I think about how much money is spent to stage the property,
yep,
to get the buyer to come in and go, oh shoot, I can see how all this works. I think strategically, realtors should be talking to the homeowners about, hey, let's invest the money wisely to make sure that the buyer can get insurance, man.
Absolutely. Well, that's one of the things, OP, why now this is our WOWS program only. We've got one carrier looking to follow suit with us right now. Okay. Our policy at WOWS is fully transferable from sellers to buyers.
Oh, is that right? Okay. Love that, man.
Yep. And the reason why we did it was we built it that way. So I'm saying if you do the mitigation, right, fire hardening, and you fire harden the heck out of this house, and you build the systems in place, and you have an annual mitigation plan where they go out every September, October, and they're spraying Komodo, the clear synthetic, and they're doing these things every year, you're going to get a great policy with a great renewal that'll push down costs over time. But at the same time, when you come to go sell it, and that buyer comes in, it's transferable.
That's legit.
This is, how we're changing the industry. And we know that there's going to be carriers that are going to copy us. We want them to copy us. The OP, I always laugh. I get people ask me this question all the time. Robert, you got the right ideas. You're doing things to fix things, but aren't you worried about being copied? I go, okay, great. So let's say tomorrow morning, I'm just saying tomorrow morning, we do a spectacular thing. We have 100 portfolios of 100 homes spread out perfectly across California. That means in, pick an area, Rancho Santa Fe. That means we're only going to insure 100 homes in Rancho Santa Fe, and there's thousands of homes in Rancho Santa Fe. So if we do everything effectively perfect, there's still thousands of homes that still need.
Absolutely.
I mean, that's how people don't realize how much of a change that needs to happen here.
Yes. And it is monumental, man. It is monumental.
And that's why we're affecting the change. That's why we keep pushing it, OP.
I love it. All right, Robert. So, man, before we close, I want to make sure that we give people information on where they can contact you, and then also be thinking about if there's anything that we didn't talk about that you want people to know about. Because I think that in this environment that we're in, to your point earlier, like right now, the awareness of the wildfire is still very, very. The scar tissue is still soft and people can remember, but give it a few months, man, and they're like,
Oh yeah.
we're all on to thinking about something different, right? Like, and so now we're going to forget about it. But what could we, or what message do you want to send to homeowners?
Really is just is preparing on your house, because I'm just going to say this now. If you are not involving a company like OP's right now, where you're looking at, that's why we're talking about as we work together on stuff. If you're not working on doing fire hardening, if you're not looking at doing annual mitigation, if you're not doing these things, because God, I say this to everybody, please understand something. I'm in every major fire. Every major fire, I have consumers that have lost homes. And what happens is I don't care how great the insurance is. I don't care very rarely it happens, but once in a while you have a person that has perfect amount of insurance, or they're overinsured. Okay. OP, you don't get back your Letterman jacket from when you were in high school. And you know what you don't get back? You don't get back your daughter's pictures of her first grade, because you didn't have those scanned. And you know what you don't get back? The memorabilia of my dad had passed away years ago. Stuff that my dad, I have still that I, look back at from time to time. You don't get those things ever back. And when you have a person, and OP, I think you can agree with me on this, when a person loses their home, it is about as close to losing a close family member as that they will ever go through. If right now both of our homes burn, man, I'm wearing this shirt, you're wearing that shirt. We have nowhere to put our head down tonight to go to sleep. I mean, all the things that are just incredibly, it's just tough to realize. And that's why I look at consumers and go, look, I understand we're asking you to do a lot. But we're also asking the insurance companies to do a lot. And we're asking at the same time, we keep pushing on municipals to do a lot. Because we're talking about doing it. You can't have it like in the Palisades, a 5 to 8 mile run up. I'm a hiker, OP. I hike those trails. Okay, from the Getty, I used to hike those trails, and it hadn't been mitigated in 30 years. You can't have a 5 to 8 mile sprint with a wind 80 miles an hour blowing a fireball all the way into the Palisades. Okay, these are all things that we're all going to have to work on together. And as that happens, you just need to realize this is the game that we're playing, and this is what we're looking at. But I mean, that's just, everyone needs to realize we're all in this together, and that we're going to fix this. And with a combination of like WOWS and your company, OP, that's what needs to happen. We're all in this to make sure we make changes, because it's not just a fact of fixing things, but fixing things going forward. That's it.
Boom. Make ourselves more attractive to the carrier, so the carrier can make a wiser investment, and then we can get back to hopefully some freaking normalcy in rates.
Thank you. We've got it. We got it fixed. We got it fixed.
That's awesome.
We got it fixed.
And so Robert, how can people contact you? How can they get a hold of you?
Yep. Actually, as my dog just barked in the background, he's telling me it's time to go. I think OP, you had your special hook on me. You had my dog coming after me at this point. So real simple, WOWS, W-O.W.S. Everyone forgets the S. So W-O.W.S insurance.com is our website that you've been on. My email is very simple. I answer questions all the time. Robert at WOWS, W-O-W-S insurance.com. After the fires, OP, I helped somewhere between 200 to 400 families that weren't even clients. We were just helping people get to the right places. That we're in this fight, and everyone needs to realize out there listening, guys, please reach out to me, talk to me. We're here to help.
Boom, boom. Robert, thank you so very much, my friend. We look forward to getting this out. And then for those of you that are listening, I know you heard something that is intriguing. Forward this over to your friends, to your family, to your loved ones, to make sure that they get this message out as well, because we never know what's going to happen. And the best thing we can do is be prepared. So, Robert, thank you again, brother.
Thank you.
Appreciate it.
Thank you.
Take care.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.